Well. Hello, everybody. This is Michael Rayford. This is Word for Word. I am your host. This is where we talk to professionals about how money works. We also talk to entrepreneurs and even entertainers. I'm going to do that again.
Can I put my it's
Welcome back. This is Word for Word. I'm Michael Rayford, your host. I am also your How Money Works educator. So, on Word for Word, we talk to professionals about how money works. We talk to entertainers. We talk to entrepreneurs. And we want to learn people's story. But on today's show, we're going to talk to, and this is a very special guest because I've known her for quite a while. Her name is Shantae Moore, and it's not the singer Shantae Moore.
nope.
But Shantae Moore is a certified financial educator with the Heartland Institute of Financial Education. Shantae, how are you today?
I'm well, Michael. Thank you for having me. How are you?
I'm doing awesome. Can you, before we jump into this conversation about 401ks, can you explain to everyone what is it? What is so certified financial educator? What is that? Talk to us about that.
Yeah, so it's an industry designation that I received, as you mentioned, from the Harlan Institute of Financial Education. It just means that we were trained to teach financial literacy topics to adult learners. So we learn obviously all areas of personal financial education, but specifically, how do we talk to adults? Because, it's different from when you're teaching to kids or youth. There's a different pedagogy to approach teaching adults because you have to rewire a lot of past things and ideas that they've already formulated as they come into adulthood. So, as a certified financial educator, we also go into organizations and companies teaching financial literacy workshops. We educate about employee benefits, which I'm happy we're going to talk about the 401k today. And then obviously, we also can offer some personal one on one guidance as well.
So talk to me because this is, because of what we do, we teach how money works. We talk about financial topics from an education standpoint. Are you a financial advisor? What's the difference?
Yes. So by practice, I am a licensed financial professional. So if you want to use the quote financial advisor, yes. Myself, I've been in the financial services industry over 15 years. I've been fully licensed all that time. So my practice, my bread and butter and how I work with folks is having my own financial advising practice, but I don't use that as like the way I approach the world because, financial advisors can be boring. It can be, it's not always the best conversation folks like to have. I like to educate. So, like you, I say, you know what, I'm a certified financial educator because I like to teach first. The advising part is more so when you sit down with someone and then you come up with the actual strategy, a solution for those folks where you sit down and say, okay, this is what you need to do. That's where the advising part comes in. But what we do at the front end, you and I, is we educate first because it makes it easier to implement the strategies once folks actually understand, like, oh, I need these things that I didn't know I needed before.
Absolutely. Thank you very much for that. And so we have this book that was published and came out just as the pandemic was starting to happen. So this is the
Hmm.
main tool that we've been using for the last 4 years now,
Yep.
right? And one of the major processes in this book is the 7 money milestones. And that's, one thing I like about that is as a client myself, but as a professional myself, the 7 money milestone lays out the entire process that a person is going to go through, which I
Hmm.
think is very powerful because on the front end, they know exactly what to expect. Not that there's a timeline to it, but they know the
Right.
steps that are going to be involved in the process. However, most recently, our second book, How Money Works
Yes.
for Women, Take Control or Lose It, just came out. And this book focuses on women specifically. Why don't you talk to us about a few of the characters and what makes these two books different?
Yeah, so I'm so happy we came out with the first book 4 years ago because it's so simple. I tell people you can read it cover to cover in an hour. You can give it to your 10-year-old, you can give it to your 100-year-old relative, and they'll learn about money. Actually, if you read the book, I always tell folks you will learn more about money than 99% of the population. So, first of all, it's been a great resource and tool for us to use. But the women's book, it just added it to a whole nother level. As a woman financial advisor, as a mother, as a divorced woman, we experience and interact with money differently than men. Not to say better, we just it's different. We face different financial challenges, and this is what the book, the How Money Works for Women books, actually highlights. We have mothers who are divorced. We have young girls about to enter college. We have characters who have children with disabilities. We have a widower. That's a unique financial situation. We also have a woman who done it right. She actually received financial guidance from a early age and now is in her 80s, happily retired. So I think what's unique about the book as well is that when you look at these different scenarios that most women will often fall into, maybe one or even more categories, the book also gives them guidance. Like if you're this woman with a child with a disability, these are the action steps and the things that you should look at. And I like that because, like you mentioned with the 7 money milestones, we have a built in practicality on the financial education that we deliver. And so I love the book. It's actually, I mean, I don't want to say it's better than the first, but even a man can read it to relate to the women in his life. And I know you avidly promote it. We talk about it so much, and it literally just came out a few months ago, and it's been a huge, huge hit. A lot of women are resonating with the messages and are, becoming more confident to take control of their finances.
That is awesome stuff. And so the reason I wanted to have this conversation today, specifically with you, is because through our workshops and through our trainings, I hear questions for women all the time about their very specific situation. And so we're going to go over, and I hope that this is not the only time we do this, because there are always new questions that come up from different women. But some of these questions are very specific about 401ks. So these are questions that actual women are asking, right? So I want to get your perspective. And of course, you're not giving any financial advice, but we're going to talk about these questions that they're asking and what's a possibility, what conversation should be going on as relates to their questions. So first of all, can you explain to us what a 401k is?
Sure. A 401k is a workplace retirement account. It is one type of a workplace retirement account. So, a lot of folks don't know, or maybe they don't really understand the relationship between the ways that we build wealth and how the IRS, the Internal Revenue Service, actually oversees our wealth building abilities. So, the term 401k, it's actually an IRS tax code. It just indicates that you are saving into a retirement account for a for profit company. You might be working somewhere where they offer like a 403b. That's another IRS tax code. It means that you work at a nonprofit organization, like a nonprofit, a school, and maybe you have a position where you are offered a 457 plan. 457, another IRS tax code. All that identifies is that you work at a place in a public service or government entity like a city or a town or some sort of municipality. So first of all, that's where those numbers come from. But a 401k as a workplace retirement account is a defined contribution plan, meaning you as the employee have the responsibility, or rather the opportunity, to contribute into a retirement account for your own retirement purposes. In addition, your employer might also contribute to that retirement account on your behalf as a benefit of you being an employee. A couple reasons why these are offered is because one, also a tax deferred account. The IRS oversees this account because they allow you to contribute from a tax deferred perspective. The money you put in goes in pre taxes, it grows and invests tax deferred. However, later in life, when you pull it out, when you need it the most in retirement, that's when you pay your taxes. So it's just a way, if employers offer it, it's a great way to start building, monies for your own retirement in the future.
That's really good information. So there's tax deferred, and then what are some other ways that your taxes are treated? So tax deferred.
Yeah, so first of all, the monies that if you decide to contribute, it goes in pre taxes, meaning The monies are allocated, they're separated out and put into the 401k before taxes are taxed on your income. So that's a huge benefit because now you have less of your income being taxed that ultimately goes to your paycheck. So it's pre-tax money, so it's never been taxed. It's sitting in this account. It should be investing and growing. Still not taxed because it has that tax deferral feature, is but it's just like now we grow it into this huge account. Later in life is when we pay the taxes. And at that point, when you start to pull it out, depending on your age and obviously the reason you're pulling it out, in most instances in retirement, you will be paying ordinary income tax rates on that money that you pull out. Now, the problem is we don't know what those tax rates will be in the future. So it's kind of like you're writing a blank check to the IRS at this point. But
Right.
again, not bad as long as we understand that and we can plan for that.
Right. Absolutely. So we're going to dive into a few of these questions. And so these are actual questions. And so the very first one is it's going to come up at the bottom. So it says, if you max out your 401k or 457, which you just explained, and then you also have self employment income, what else should you be doing if you're over the age of 50?
Yeah, so the one thing we like you mentioned before is we can't give financial advice. But what I can tell you is you have options. And obviously it also depends on if you're married, because if you have a spouse, that'll factor into some of the numbers. So I won't go into the details of like what the IRS tax code says, but would just want I want to answer this question from the perspective of, if I max out my 401k and I have extra money, period, what should I be doing? What should I be saving? And especially for those over 50 years old. So a couple of ways that I look at this as a financial advisor. One, if you're 50 and older, you're closer to retirement than you think you are. We call this like the retirement red zone. You're probably 10 to 15 years away from retirement. Your job and thought process with any savings should be, okay, I've accumulated, I can accumulate a little bit more. Maybe I have another 10 years or more to actually try to grow as much as I can. You also want to be wise in where you put that money. You don't want to be at a position where you're taking on too many risky investments to where your money could take on huge losses because you likely won't have the time to recover those losses if the market goes down. Um, so if you have extra self-employment income, self-employed, you also have other accounts that you can establish for yourself, like a SEP IRA or a simple IRA. Now, which one do you do? It really depends on if you are an independent contractor or not. SEP IRAs usually work best for independent contractors. If you have employees, you're self-employed and you actually have other employees that work with you, that's probably where a simple IRA might work better for you. And again, these are just all different types of retirement accounts for entrepreneurs and small business owners. And then again, the fact that it really doesn't matter the type of account you open, is what do you put inside of that? What investments are you choosing? That's where you really want to sit down with a professional who can give you, actual guidance based on your risk tolerance. You might even be someone who says, you know what, I don't want to lose one penny. Okay, great. Then you know what, maybe an annuity strategy might actually be better for you. And there's different types of annuities out there. So it's no one size fits all solution, but there definitely are a lot of options. You could even leverage cash value life insurance at that point if you're pretty healthy still. So you have actually quite a few options to consider outside of just the 401k.
That's really good. That's good stuff. Okay. So let's go on to the next question. It's coming up. So if I have a 401k and I move it to a 401k IRA, now I'm with a new company. Would it be wise to combine those two together?
Yeah, so let's clarify. I know you didn't type these questions. We literally took it from, some women's comments.
Right.
There is no 401k IRA. She probably meant to say a traditional IRA or a rollover IRA. And that's fine. We don't know those that lingo or those nuances. So let's say you had a 401k, you are no longer with that employer and you rolled it over. You took it out that employer's 401k and you moved it somewhere else. The only option you can move it into is a traditional or rollover IRA. So the scenario is I start a new job, which then now offers a 401k. Should I consolidate the two? I say in general, and my general advice is no. And why not? Well, the 401ks, while they are, great accounts to take advantage of if you have access to it, because typically you wouldn't save for your own retirement. It's the easy way just to save for your own retirement. The one downside about 401ks is that they're often limited in investment choices. You might have 20, maybe 30 mutual fund options. They have like those lifetime, mutual fund index options. And from my experience, they're not the best of the best of what's out there for how you can grow your money. So you have a way to grow money for retirement, but you're often limited as far as what are the choices that I can use to grow the money inside the 401k. I always recommend to clients, you know what, you want to have full control over your monies. And if you've severed employment, that's when you can take full control over those retirement monies. And that's when we typically do roll it over to a specific IRA. But doing so, especially if you're working with a professional, we give you access to the whole world, like 10, 20,000 options. You literally go from 20 to 30 to hundreds and hundreds of options. And why is that a benefit? Well, number one, we'll probably find the best of the best, investment products out there for you. 9 times out of 10, you'll pay way less in fees because 401ks actually have a lot of hidden internal expenses that a lot of people don't know about. But number three, we're able to customize a financial strategy to where now we can really grow your money that best suits you, because we're not trying to just limit ourselves to these 20 or 30 options that are inside of 401k. So, a lot of folks don't know they can do that. I don't typically recommend, if you have nobody to talk to, is it the worst thing in the world? No, because I always tell folks, if minimum, you don't want to leave money with an employer you no longer work for. Nobody's watching that money for you. You should be getting a statement in the mail at least every quarter. But if you're no longer attached to that employer, why leave your money there? At least put it under the same house, as your new employer. You know how we say, if my kids are in the backyard, I want them in one fence so that I can see them not at this neighbor's house and that neighbor's house. Like put them all together.
Right.
Um, but work with a professional who can show you, we open up the world to you as far as what options are out there.
And I really like that example that you just gave about your children being in your backyard. And I
Mhm.
think that's something that a lot of women can relate to because, of course, they're always concerned about their children. They want to know where they are and that they're safe. So that's a really great analogy. And these
Yeah.
questions, you can tell that they were asked by people. You can kind of tell how much financial education someone has by the way they ask questions. And
Right.
so the last question is, and you kind of already answered this, but I want you to just really talk about it. 401k or pension or both?
Yeah, so let's understand pensions. I love a pension. If you have a pension, you are so lucky right now.
Mhm.
Like only statistically, only about 15% of employers or less actually still offer a pension. And a pension is a defined benefit plan. Remember, I said 401ks are defined contribution plans, meaning you have to contribute to your retirement. Pensions are totally different. They're defined benefit plans, meaning your employer automatically contributes to your retirement on your behalf. So the pension, and I'll just quickly explain what a pension is to help us understand how to answer this question. So, a pension being a defined benefit means that if I work for an employer based on the length of time, based on my income, by the time I choose to retire, and they might have their own retirement age, that employer will pay me a lifetime income for the rest of my life. I'll get it for the rest of my life. Now, if you live a really long life, you'll get that income that entire lifetime where you could collect a lot of money from the company. If you live a short life, then you won't collect as much money. And then, maybe some monies might be left over to go to your beneficiaries. And that's why a lot of companies stop offering them because people are living a lot longer. When pensions were first established, people were really passing away like literally 5 or 6 years after retiring. Now you can expect to live in retirement just as many years as you actually worked. So if you've worked at a company for 30 years, you can expect to easily live 30 years in retirement. And that becomes very costly to employers, and that's why they stopped offering pensions and moved to the 401k model. All right. So now that we have that basic understanding, 401k versus pension. you can't understand the difference versus both. I actually do have clients who have both of these as an option. I work with a lot of people in the trades, and their unions actually still offer them pensions. And their pensions are great ways that they have money, that the union establishes and helps them grow for their retirement, and it's done automatically. So it's not like I have to choose the pension. It's automatically done in most cases, where the employer is automatically setting aside that money for you, whether you want it or not. Now, the 401k, if, like, for example, my union tradespeople clients, they're part of the union, but they still work for an employer, and that employer will offer them a 401k. Absolutely. I tell them, take advantage of it. You're getting like a double whammy retirement benefit. So, yeah, you absolutely do want to take advantage of both if you have the option, for sure.
That is really good information. And I'm glad that we had this opportunity. And hopefully we can do this once a month, because after every workshop, I get questions. And so we can go from a 401k to, whatever concerns these ladies have as relates to financial literacy and, growing their wealth, retirement, saving for college. What should I do? But I think it's really awesome that they're asking questions, because I think one of the main things about this book is women need to start having these conversations amongst themselves and with their friends and family as well. So is
Yeah.
there anything else that you want to add or announce or just talk about real quick as we wind up?
Yeah, I think I'll just close by encouraging not just women, but just folks too. These are really great questions, and people are thinking about these things. And just like how in, just a short amount of time, I was able to easily and clearly explain these things. Never be afraid to go to professionals and just have a conversation and say, you know what, I want to get educated. I really want to learn about XYZ. I have people who will do consultation, and they'll say, you know what, I've heard about this Roth IRA thing. Can you just explain to me what that is? I always encourage folks, take advantage of professionals like yourself, myself, and just have the time. Don't, sometimes as adults we think we know everything because, we're in good jobs, we earn a good income. We think we're smart, and you really don't know about money. You don't know what you don't know. So that's the number one piece of advice that I'll say is reach out to professionals, not social media, expert, non-experts. That's
We know
another.
that's financial literacy is the buzzwords on
Yeah.
social media, and you just never know. And some will tell you, I'm not licensed, I'm not giving financial advice. At the same time, you have to be very, very careful because everybody's situation is different.
Yeah.
So I
And the
want to
one
thank you,
thing.
Ms. Shate. Go ahead.
Oh, no, I'm sorry. I was just gonna say one thing to kind of differentiate who's real, who's a professional, who's not. Number one, like you said, we have licenses, we have credentials, and we have, we work in a very highly regulated industry. So if someone doesn't have any licenses or credentials, then what they're doing is just giving you their opinion. So that was all I wanted to clarify.
Yeah, and it's good to understand that, because again, what may be working for them on a personal level may not be everything that you need. So you just have to take things with a grain of salt. And again, sit down with a
Mhm.
professional, learn, but then you have to implement. I think, which is probably the most important thing, is because we can give you all the greatest information in the world, but if you don't do anything with that information, then it was all for nothing. So Ms. Shante Moore, certified financial educator with the Heartland Institute of Financial Education, also How Money Works educator. I appreciate you. Thank you for your time, and we look forward to speaking with you again next month. All right.
Likewise. Have a good
All
one.
right. Have a great day.